stocks are going down, stocks are plummeting. How can you make money when the stock is going down? Traditionally, you only make money when stock is going up, but you can make money as it's going down. Today we're going to be talking about options and touching on the subject and understanding how we can make money as the market's going down. There's two ways you can make money when the market is going down, and one is a margin account, which unless you really know what you're doing, I would stay away from, because all it is you're just borrowing money from the brokerage firm that's leveraging your principal. But if you lose more than your principal, you're going to end up owing them the money that you lost plus interest. So if you're just a new trader, stay away from that until you understand what you're getting yourself into. Also, there's something called options, and this is the easiest way. It's not foolproof safe. You can lose everything as well, but you're not going to lose somebody else's money. You're only going to lose your own money, worst case scenario. So what you're seeing here is the option chain for Tesla for the weekly, which ends September 30, 2022. So what you have on the left is the call side. You have something called the put side on the right. What you see here shaded in blue or purple is something that they call in the money. And when you buy an option, you want to be in the money, or maybe one or two max out, because once you get up here, it gets very risky, very, very risky out here, because there's something called time decay, meaning as we're fast approaching the 30th, the prices and the value of your option is decaying. It is going to zero by Friday. If you're not in the money, it's going to go to zero. Okay, you need to be in here. So if you're in a trade where you're fast approaching Friday and you're not in the money, chances are you're going to lose everything. So you've got to get out of that trade and save as much as you can. Don't write it out and thinking everything's going to turn around, because you got time going against you. And what I have here is something called the delta. If you see here on the left, the delta. What this shows me, for every $1 this stock price goes up, I gain 52 bucks. Not bad. Same thing with puts over here. For every time that price goes down $1, there you go. So if it goes down in price, we're going to make money. So if this goes to $281.94, I make $49. Get that? And you see how the price increases the deeper you go into the money? So this is the beauty of options. I don't have to buy a stock here and make $52 when this thing actually does go $52 in a week or a month or whatever. I can do it like in an hour. I can do it in a minute. Let's take a look at how fast options work here. Okay, to see how the option chain's working on a chart, you can actually go to your Thinkorswim platform, and on your options chain, right click the strike price that you're in. Let's say I want to buy a put, and I think at 7 o'clock it really did a good move this morning. So let's see how much we could have made. Okay, this is the options chart in 1 minute. There was a huge move at 7 o'clock. So judging by the standard price, we would have probably got in somewhere around there about $6.55. So that would have cost us $655 to get up. Price jumped, started pulling away. The next candle jumped up and it pulled back a little bit. I would have already been out. This is a 1 minute deal. Yes, could have wrote it out, but dude, I'm done. How much could we have made? Remember what we bought in? 660, what was that? 662, and I'm out at 726. That's $64 in a minute. Did you catch that? $64 in a minute. This is the beauty of options. Did you just see that? $62 in 1 minute. That's awesome. But it's also deadly. You can lose $62 in a minute also. So you got to have a thick skin for this one. But the more you learn, the more you trade, the more you harness your emotions, the better options trader you're going to be. You're going to be a better trader. I do not recommend margin accounts if you're just beginning. If you're just getting into the market, you're just learning how to trade, do not start with margin accounts because you're going to be left in a hole. With options, if you blow up your account, you lose what you lose. Okay? And that's it. And that's the beauty of the options. You only lose your principal. But the gains are enormous. You can get, I know people that are trading SPY and the Qs that are doing, 2 or 3 bags a day. I mean, it's incredible. And when I say bags, what that means is you've doubled your money. So if you get into a trade and let's say it cost you $400 and then it goes up to price, you gain $400, so it goes to $800. That's one bag, and then so on and so on. I've seen option prices go $1,000 in a day easily, and that's the beauty of options. It's the potential's there, but you have to manage risk, and by managing risk, that comes with experience. All right, so I hope this was all right. Happy trading out there. Catch you next time.